Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday. Great to be back with you all on this awesome Wednesday here in London. The sun is shining. Apologies, I wasn't with you on Monday. It was my birthday, so I took the afternoon off to spend some time with some family, which was really, really cool. But a big shout out, as always, to everybody joining the stream live and for all of those people that are going to be watching this on recording as well. So we're going to steam into our alt request Wednesday. All right. So if you've got anything that you want us to take a look at, then do fire it over in the chat and we'll make time for that. Obviously, in advance, apologies if we don't get around to everybody's. I know sometimes we don't always have time, but I'll definitely try and make time today. Something else I wanted to do as a little treat, really, or a bit up my own arse, isn't it? A treat, really, but just really to give you guys a little bit of insight into a day trading strategy that I've used for a number of years that utilizes indicators as well. I know a lot of people don't like just seeing price action on the chart. They feel a little bit lost by it. And occasionally I use indicators as well for a bit of confluence. So I thought it might be something that's of interest to some people. So if it is, I'm going to run you through exactly how I would day trade it. So we're going to pick an alt completely at random. We're going to do our top down on it. We're going to set our levels. And then before we overlay any of the trades, I'm going to explain to you exactly what it is. Bernd Gregory Brown, thank you very much for the birthday wishes and very good morning or good afternoon or evening, depending where you are in the world. Bernd, can you now drink alcohol instead of tea? Absolutely, mate. If you can just about hear, that's the sound of the new glass teapot. Unfortunately, we wore the stainless one out. It was an absolute soldier, but just to put into perspective how much tea I've been drinking, I managed to make a stainless steel teapot rust. So after I'd imagined ingesting a fair amount of that rust before realising, I've now moved to a little glass number, which was a lovely little present for my birthday. So thank you very much. Craig, thank you, mate. Whack, great to see you on here. Great friends of the nest. So, guys, while you're thinking about the altcoin stuff, let me just pick up where we've been on Bitcoin, yeah? So let's make this full. Right, so this has been my premise, since for the last I don't know, couple of weeks, right? The idea is that this leg up, right, that took out this high, took liquidity from this low, this leg here is what I believe is currently containing price, all right? So what do I mean by that? Well, if I'm looking at this in the elements of premium and discount, meaning if this was a premium discount range, then we'd want to favour short setups from the upper 50% and longs from the lower 50%. Now, this is a very basic way that I use this range, right? These are from original ICT teachings that I took a number of years ago with his original mentorship. I'm not a purist. I know I keep saying that, right? I don't blame anybody that is, but for me, it's just one of many people that I've studied over the years with great interest. But I really like this concept. And for me, it gives a lot of logic because if I was thinking about where the value is in this price leg, I'm not getting a lot of value longing up here, right? My best chance of getting value if I'm retaining a bullish bias is from down here. Why? Because it gives us the best risk to reward. Then what we're looking for here is, okay, well, what else sits with our confluence, right? I'm just going to make this a little bit less obtrusive. So what else sits with that confluence? Well, if I want to see price down here in the lower 50% of this range, what have I got? What's my draw on liquidity? What's my draw bringing price down? And for me, it's this order block here. Yeah, this last down candle before this expansive move higher. The fact that immediately after this, we get this fair value gap. Yeah, this displacement gives a little bit of extra weight to this order block. We've also got these fair value gaps down here as well. So in an ideal world, to hold a bullish scenario, what I would like to see is price to come down into this kind of area, and then do something like this on the lower time frames, right? Where we're going to get, just wigged out on me there, where we get a sweep of a low, this low here, price comes back above the high, before we then ultimately move up to attack liquidity higher up, all right? So that would look like a purge lower, all right, to find ourselves in our key area. Then when we have this move down, why this move down? Because it shows that we've swept some liquidity. This is on your execution time frame, by the way. And then here, we've broken and held above the high that took the low. And then for my trading style, I like to see a sort of fair value gap in this displacement leg higher. And then this is where we get our entries, all right? So that's my current thinking on that on the higher time frames. All right, guys. So I hope that's clear. Like I say, it hasn't really changed much at the moment. Do still expect lower price action, but that doesn't mean that we can't day trade in and around it, which is what I'm going to show you today as well. Moral, good morning, happy hump day, bro. Thank you very much, my friend. And Mr. J5, cheers from the Adriatic. Beautiful, beautiful sea. The Adriatic, just this crazy, crazy crystal blue. Absolutely immense. So brilliant, guys. We've got a load of people watching on the stream now, so welcome to everyone. If you've just kind of joined in, we're looking at this range here from this leg, from this price action leg. We're now expecting price to kind of purge down here lower. This is on a daily scale, all right? So World King and One Top. Hope I've got that right, mate. Yeah, sure, by all means. Well, I just want to really show you kind of my thought process around this. So being a day trader, my key kind of areas of interest are, for a higher time frame, is looking at the hourly, all right? And then I've got a really, really keen interest on liquidity, yeah? Whack, sorry, let me just deal with this question quickly before we go into that. So monthly, yeah, absolutely monthly. Now, again, it very much depends as well on the time frame, right, that you're trading. So if we were looking at this on a monthly scale, as we are here on Bitcoin, then one of the areas that I'd really want to see held here is this area, right? Because the reason this has significance is because it was a bearish fair value gap on the way down. Price came in to rebalance this, sold off, took the liquidity below this low. We then expanded higher, leaving this fair value gap in here, right? Which price then came down to fill before moving higher. Now, the key thing about this area for me on a monthly scale is if we look at this fair value gap, yeah, so just zoom in on that so you can see it, which is this bullish fair value gap, which overlays this bearish one. We've got basically an inverse fair value gap situation where we want to see this hold as support. Now, the good thing about this is this actually ends up playing into our theory as well. Now, on a monthly scale, prices come down to try and rebalance this previously. If we were drawing this as a premium and discount range, if we were allowing for this leg here, yeah, from the low to the high, yeah, then we would want to see price purge a little bit lower down into this part here. However, for me being a lower time frame trader, that's not as significant, right? What is significant is this bearish fair value gap overlaying a bullish one. If we see this area hold as support, then I really do believe that we start to make a move higher, yeah? And when we're talking about looking at this on a monthly scale, if we apply our premium and discount here, yeah, then what we can see is we're very much still favouring long setups down here. And the fair value gaps we'd be looking to target are ones up here. Now, we need to remember this is all about context, right, guys? So it's about the time frame that you're trading on, what you're looking to execute on as well, okay? But that's a very good point that does. And also, I know, Whack, you're probably looking here at this fair value gap, the one we just discussed, but also this one down here, yeah? So for me, while we hold this, I think on the higher time frames, it's still holding some kind of bullish momentum. If we start coming underneath and losing this, I do think there's a chance that we purge and look for liquidity a little bit lower down, all right? So let's just get rid of that for a second. Move back to our hourly. So here on the hourly chart, and kind of as I said, looking in terms of indicators, just want to give you guys an idea of how you can use these different indicators. So depending on whether you're considering this as a range-bound environment, right? So range-bound environments, typically, if you want to look at these legs where you have this impulse move up and price sets a low, yeah, you've obviously got a larger version of this here. Yeah, big move down, price comes back to interact with the midline here. If we were to draw this out as a trading range from high to the ultimate low, yeah, we can see that it's pretty choppy in and around this midline here, all right? So at the moment, we'd be in the lower part of this range. The key thing for me is looking at where liquidity is resting, all right? Diggs, hey, what's up, buddy? How you doing? So for me, I think if we're looking at it, not always, right? So got a question here in terms of it always retesting a fair value gap. So just to kind of build out on the fair value gap thing very quickly whilst we look at that, if we look at the areas for which we've got fair value gaps in, yeah, so the fair value gap is the gap three candle pattern. So for example, for this one, you'd be looking at candle 1, candle 2, candle 3, and it's the gap between candle 1 and candle 3 if the wicks don't overlap. Yeah. So you can see when you've got this price action in here, we can see the candles overlapping, and then we get to this one here, we see this impulse move leaves our fair value gap in here. What you notice is price comes down into this area, rebalances before then moving higher. All right. Gaps don't always have to be filled right away. Yeah, they're just something that we bring into the confluence of our trading. So to give that a little bit more context, yeah, then we can look at adding a couple of indicators in. So this is a system that I've run with a number of students in the past, a system I used to run and still do run today, using B Pro. So let me show you what that is. Let me just pour out some tea quickly. Beautiful. Right. So I know some people like a bit more of a visual stimulus on the charts, right? I always used to like that myself especially when I really first got into trading, I first really started taking it seriously. It was really nice to have these. I suppose they look kind of a lot more like visual triggers, right? And I know that's important for some people. By the way, the vertical lines going down the charts are just day breaks. Yeah. So let me let you in on a couple of indicators that I use, right? The first one is the B Pro, the Burbicator Pro, and this is the trailer system. Yeah. This is basically an advanced super trend. All right. B Pro is the best I've ever come across with this. For this and divergences, there's none better. But if you don't have access to that, or if you're building up the funds, this is a paid indicator. You can find information to it in the description below, or hit me up and let me know, and I'll send you a link. But I appreciate it's not within everyone's reach at the moment. I'd always recommend using the very best tools, but sometimes it's not practical for anyone. So you can use a super trend, right? And I set this time frame to be on 1 hour, right? And this basically dictates my trend. Yeah. So first of all, when we're looking here, when we're under the black line, we're only looking for bearish trades. When we're above the grey line, we're only looking for bullish trades. All right. It really is as simple as that. What I'm then going to do is we're basically going to create a little system together today. This is really to show you that, not in terms of easy, because it's all about the testing of data. You've got to love data in this game, right? So what you want to do is come up with a theory, and then you want to just back test it aggressively, right? So our one today, yeah, let's get a little text box up here, yeah? And let's run this strategy together today. So first of all, point one is B Pro trailer or super trend. Set to 1 hour. All right. Now, our second bit that we've got here is being a trader of liquidity, as I am. Prior days high, prior days low, prior weeks high, and prior weeks low mean a lot to me. So, prior day high, prior day low, a priority, right? Now, that means that if we run the prior days high or the prior days low, then that covers our bias, all right? So, what that means is if we're bearish because of the trailer, but we run the prior days low, the prior days highest, the prior days low, sorry, so bearish trailer, falling over myself here. So bearish trailer, yet we run the prior days low, yeah, then that takes priority, meaning that we favor that, okay? So we always favor liquidity in this game. So indicators are great, but we never want to rely on them completely, right, because most of them are lagging. Then we're going to bring in a style of stochastic. And for this, I'm going to introduce you guys to the B Pro one, which I believe the very kind people at the Nest have now made free for everybody. All right. So they're really going to be the key things. All right. So make that a little bit bigger. And then hopefully that's something everybody can see there. Yeah. Actually, you guys probably want that bigger than that, don't you? Yeah. So that's it. Real simple premise. What are we looking? We're looking for highs to be swept and reversal trades. We're looking for lows to be swept, reversal trades. If we're trending, then we're looking for where the nearest pockets of liquidity is resting. Yeah. And then we're building our theory around that. So very, very simple, right? Now, what do we then want to do from here? So I then move to a 15-minute chart, right? And what I'm going to do here is I'm going to add a couple of bits. I'm going to add the Burbicator Pro stochastic. Yeah. Now you guys can find that on here. You can go to indicators and you see this one here. You can find it under Crypto Burb and it's called Burbicator Stock TKD. Yeah. If anybody wants to take a look at that later, you just hit me up and I'll write it down in the chat. Okay. But that's the Burbicator Stock TKD. Yeah. By Crypto Burb. And what it is, it's a slightly advanced stochastic combined with a histogram. All right. Now, what we're looking for here is momentum because a lot of people struggle with the conviction when entering trades. Yeah. So people will sit there and they'll kind of say to themselves, right, I really want to go short here, but I would just love that little extra nudge that gives me that confidence. All right. So, one more thing that we want to add to the chart are our prior day high and our prior day's low. Okay. And you can find this brilliant free little indicator here called previous day high and low. Yeah. Really, really, really simple. All right. Now, what you can see that it's done here is it's added these blue lines. Yeah. So this blue line on this day represents the prior day's high here. Yeah. And this blue line here represents this prior day's high. So that's what we want to be aware of. So let's give this some context. I personally prefer trading the New York sessions. All right. So I've got this beautiful indicator here by Dr. Fuse. It is a paid indicator. If you're interested in that, let me know. No affiliation, right? No sponsorship or anything. Just a really good guy, a great price action trader. He makes these beautiful indicators. It gives me the name up there. It allows me to dictate my session times along the bottom. There are other free ones available as well. So there's this one you can find here called CM time-based lines. Yeah, let me just open that up so you can see that. And this is basically the way that I have this set up is just to show me the beginning of the trading session. Yeah. So this is New York, right? That's 1:30 UK time that the New York trading session starts. And then this is my key kind of area of interest here, right? So let's look at how we piece all these together. Yeah. So right now we're just looking at this day here, right, which was yesterday. All right. So just so that's clear, that's between this and this, right? They're our session breaks here and here. They're simply set to midnight UTC, all right, which is standard. So as we look at these, we're now asking ourselves a question. Let's remember our parameters here, yeah? So B Pro trailer, yeah, or super trend set to H1, which we've got here. Now we can see Tuesday that this had us bullish, yeah? So why were we looking for bearish setups on Tuesday? Yeah. So let's take a look at point number 2. Previous day high or previous day low takes priority. Yeah. So when we mark this on here, and I'm just going to mark this on for a second and then close off the indicator just to make it look a little bit cleaner. So here's our prior day high, right? Do that in a nice bright green. And I'm just going to turn this off for a second just because I know lots of lines on the charts and bits and pieces can all look a bit confusing. Now, I'm also going to turn the B Pro off in a second, but not before I made sure that I've made it really, really clear that the reason that we're ignoring B Pro here, yeah, is because we've run the prior day's higher. Now, remember, that always takes priority for us. So as soon as we've run the prior day's higher, yeah, then we're looking for bearish trades. We're looking for price to revert back within. So let me just pop this off. Is that clear for everyone so far? Just trying to make a really nice, just little simple setup you guys can go away and test or build something off the back of. Do let me know if this is something that, if I'm losing you guys, all right, if you've got any questions. So what am I looking for within here? Well, the key thing for me is I really want to see price trigger within the grey or the blue boxes here. Yeah. It can trigger afterwards, but the other condition that needs to be met is this. If I want to go short here, yeah, we can see beginning of the grey box. This is what I want to see. Can everybody see that all right? Maybe brighter green will help. Yeah, can you see that green dot there? Let me make this bigger. Now, can you see the line here at 80, right? What I want to see is price in and around this level if I'm looking to go short and to be moving. You see the orange band represents bullish. See how we've crossed here, yeah, to the black band, showing me along with the histogram here, right, that momentum is now moving back down. All right. So if I want some confluence, yeah, as for why I'm looking for short trades, this gives it to me. Price has run higher. The indicator agrees that price is now starting to move lower. Now, our execution is going to be based on my main strategy execution, right? Which is really, really simply, we need to see, first of all, a move breaking or shifting market structure with displacement. All right. And I'm going to show you what that pattern looks like. All right. Now, I hope these are just punctuation errors, not, yeah. Okay. So, move, breaking or shifting market structure with displacement. Yeah. And one more thing to add for this, my execution is going to take place on a 5-minute chart. Okay. Cool. So, a move, breaking or shifting market structure with displacement. Ideally, we want to see a sweep before that as well to show us that liquidity's been taken. So the area that we're interested in is right here. Yeah. So let's mark that up. Now we'll move to our execution time frame. Now we can see the dot that we've got on here. This now corresponds beautifully with the 5-minute stochastic as well, although I don't really pay much attention to this. If I was looking to go short here and this was all the way down there, I'd wait for it to come back up. Yeah. But what I want to see from here on out is purely price action. Okay. So remember what I said. This is our area of interest. It's met all of our criteria. We've got price action on our side. We've run the prior day's high, knowing that the chances are that it can be a liquidity sweep and price is going to move back in, right back within the range. So we've had that. That overrides our trailer. We've stepped into the start of the New York session, which is the highest volume trading session. Yeah. So now we're looking for a move, right, that breaks or shifts market structure with displacement, right? So that's this move here. So let me explain what that means. So we want to see this. So we've got higher highs and higher lows being made in here, right? Let me zoom in. Yeah, higher high, higher low, higher high, higher low, higher high. Where was the last low? The last low was here. Yeah. Now we've swept these equal highs here. That adds a little bit of extra juice to the pot, right? We like seeing that because this move higher, yeah, that comes after this has swept liquidity from these highs and now it's broken down. So remember, we want to see a high energy move that breaks or shifts market structure. So here's our market structure shift. Why? Because we've gone from higher highs and higher lows to setting a lower low. Yeah. Now what I want to see is a fair value gap in here, because that's the displacement. That's our entry, right? That FVG. So when price breaks down on the close of this candle here, we're looking for the fair value gap. Now you can use, again, I do use this, but I don't want to overcomplicate it for you, the premium discount, right? Meaning that we draw our range from the high to the low of the displacement leg, but before price recovers, and then we're looking for the first fair value gap that sits in the upper half of the range here. But while you're practicing this out, you can build your own entry techniques and methods. You can use breaker blocks, the last down candle before the purge on liquidity. You can even use closes below this key level, so your entry could be there. But for me, I like to make sure the risk to reward is in my favor. So my limit order then gets placed here at the start of the fair value gap. Stops go over the top, right? And we've got an initial and easy made first target of the prior day's high, that we swept. We can then see when we get to our initial target, I would probably be trimming some here at this low, right? And that low is at 1.8R. I'd probably take enough to maybe cover the stop loss or maybe cover a bit, but I would be moving my stop loss to entry, making sure that the trade is risk-free. All right. So does that make sense, guys? Have I still got you all here? Are you all a little bit bamboozled by it? Is it too simple for you? It's kind of hopefully a little bit of a clearer way to kind of for people to use indicators along with price action. Because look, at the end of the day, just a price action approach to this would be very simply, you'd be taking your premium discount range on a higher stage. So we'd be in the upper 50% here. These are our equal highs. We're looking, hang on. There's our equal highs. We're looking for a purge on key liquidity, which is represented by these equal highs, then a breakdown, an impulse move, leaving displacement. We're then getting our favored setup as we do here, and no indicators needed. However, when we go back to the 15-minute chart, we add our stochastic back in and we combine that in with price action, all of a sudden, and time as well, time is very important, we can see how the start of this move really helped give us some confluence here that the market momentum was starting to shift, and see this key high here, we can see another move such as that there. We get this move down here, initiated down here, comes back down, starts to move bullish. Again, on their own, then indicators, I think, will most likely end up getting you tied in knots, right? But if you're laying it over a different system, then it can really, really help, all right? So hopefully I've retained some of you here. The numbers didn't seem to drop off too much. Hopefully it gives you a little bit of insight, guys, if it is something. I know quite a few people contact me and they say they're either struggling with trigger mechanisms or really struggling to read price action, or they take one particular high, maybe trying to go short here, and then they get swept out here. So it's just showing you that you can put together a set of rules and parameters that can then really kind of help you build a system by when the trade triggers for you, right? There's no real hesitation in it. It's just, you've met your parameters, you've hit the key points, you've got your trigger, you enter your trade. If you lose it, you lose it, right? But you keep up consistently over time. And you want to be running this on just hundreds and hundreds of data points, right? And building those data points out and journaling all of them and making key notes and asking yourself questions. When I was developing a similar system, I was asking myself, is it the right thing to be handing over priority to the prior day's high or low? Statistically, was that the right thing to do? And I tested it over several hundred trades, and it was, because perception can be a strange thing, right? It really, really can. We can think something, but then, completely flip reverses on us when we actually get the data together. So, does anybody have, either this is going to be a very short educational live stream, or does anybody have any alts they like us to take a look at? And we can then look at it and maybe look to overlay this system on it and see what we could have. Is the stock 5 or 15 minutes? Really good question, Craig. Yeah, so I use the 15-minute stock. So I keep this on its regular setting, which is chart, and then I'm just looking at it on the 15 minutes. I don't pay too much attention to it on the 5-minute, in truth. It can add a little bit of confluence, but also, obviously, it moves 3 times faster on that. So basically, while you're looking for that move and that displacement, sometimes it can put you off a little bit as it starts to creep back up or go back down in the opposite. But I would say 15-minute is absolutely fine. If you're using premium discount ranges, I like to use the hourly for that. Otherwise, again, you start stepping up too much. But it doesn't mean, guys, that you couldn't use this on a higher time frame system. That's me day trading this on a 5-minute execution. You might want to execute on a 15-minute chart, in which case you should do the you should look at things like the 4-hour and then maybe the hourly and then the 15-minute. Darren Randall, what we got? I struggle with wicks and tend to prefer, therefore, charting on the line chart. Any thoughts or tips? Thanks for your work. Oh, you're very welcome, mate. Yeah, do you know what? someone that's become a good Twitter friend of mine, actually. A trader called Dominic James. Dominic James FX. You guys should really check him out. Fantastic old school currency trader. One of the best voices on CT as well. His videos, this beautiful Northern Irish accent just slays me. I want him to read stories to me. He's just one of those kind of accents. But what a magnificent trader. Someone like, big obviously influence and inspiration of mine, SZ, really big fan of him. It was actually SC that introduced me to him. But one of the really interesting things that he taught me about line charts was this. Now let me turn off the session breaks for a second. Now I know people struggle with support and resistance, right? So if you're looking at that and you're looking for key areas and you're thinking, like, okay, I can see that a lot of price action stopped here, but if I draw my line up here where I can see price action kind of being held, then there's not a lot of confluence here, not a lot of confluence here, right? Well, a really, really good way to do this, right, is to go to a line chart. Now, all of a sudden, with a line chart, I don't know what it is, but things just seem to be a bit clearer. Yeah. So let's say, for example, we're looking at these lows, and we can see that we've got this cluster of lows here, right? Something stopped the market here, here, here. Market holds here, boom, sells up. When we look down here, what happened? Price came down, resistance, comes above it, right? Comes back down to this area here again. Now, bearing in mind, guys, that support resistance lines can be really, really deceiving. Yeah, they're more like areas. In truth, if we were looking to draw this out, right, you'd actually be sort of thinking about something like this. Yeah. So it's more of an area, right? Because orders are never going to fill in necessarily an exact place. But I found this a really, really helpful way of looking at key levels and adding support and resistance. Yeah, and you can do it higher time frame, lower time frame. For me, it just really, really makes a lot of sense how you can see kind of where price interacts. And if we just scroll back and just pick a completely random point on the chart, as long as TradingView's feeling like playing ball, which it doesn't look like it is, there we go. So, silly things. We've come down, we've had this big drop here, yeah? I mean, which one of these highs and that are we really going to look to take? We've got a pretty key level here, right? If we look at these, we can see we've got this high here and this high here. Equal highs, equal lows, right? Now, all of a sudden, as we trace back through the price action, we can see that it had significance here, and here. What happened? We broke above, came back under, big expansive move higher before coming back into this level here to find support again. Now, that's one of the best tips that I've been given in terms of using line charts. I personally am very much a candle trader because I like to see the wicks in terms of where we've swept liquidity and where price then looks to move away from. But absolutely for line charts and that, I can understand the clarity of them. And when you start moving to traditional market assets as well, things like FX or equities, they can be even cleaner. All right. And Bernd, you take a look at the IDR indicator. It's a real money maker for me. Awesome, man. Yes, I'll certainly have a little play around with that. Like I say, I don't really use indicators a lot. I very much am a price action trader, but I do really like using, that system. That system for me for a number of years was really, really key. It was a slightly different version of the one there is now. The one that I've just shared with you has been refined slightly, but really it's set more to highlight the fact that creating these systems isn't necessarily the difficult part. Testing them, making sure that they stand up over time really, really is. And also making sure that it's a system that fits your eye. Not everybody really wants to trade low time frame charts, right? A lot of people have interest in higher time frames, or because of other commitments, family, work, etc. It's not always possible. Darren, you're very, very welcome, buddy. So we'll either put a pin in that for the day, leave this as a slightly shorter educational thread. I'll get it shared out on YouTube and Twitter as well, so if anybody wants to revisit it, and then if anybody's got any questions, we can look to review it again on Monday. Unless anybody has any altcoins or FX or equity markets that they'd like me to take a look at. We just give it a minute just in case anybody's got anything they want to pop in the chat. The one drawback I have to say immediately about a glass teapot is it really doesn't keep the tea as cold, as warm as the stainless one. The only drawback I've seen, though, I do love the way that it looks in there. Craigie boy, okay, brilliant. Let's close the day out on FTM, shall we? Let's take a look. So let's get this up. Well, let's do a couple of things. We're going to look at FTM, run a key one on there, and then we'll finish off on STX. Greg, remind me of that. So we're going to look at that. Now, before I just delete all of this, right, we can see here a couple of things. So one, when we were reviewing this previously, we were looking for this high to be taken, which we got. Our main target was then this low, which we can see we just kind of nibbled here before price then had a reaction. Now, the reason, in my opinion, that price reacts at these highs and lows is because of liquidity, right? If you were a big player and you were smart enough to be long here, there would be stop losses under here, meaning that if you wanted to reverse the market here, or if you want to sell, your positions back to someone that's willing to buy down there, you need to generate a lot of liquidity. These lows often get run to do just that. Why? Because people that were long here have their stop losses underneath, which are sell orders. People that obviously want to buy need to create a lot of sell orders, right? So they do that so that those orders can get filled. But that's all semantics for now. Let's just pop that into a group. Pop that off of there. Queenie, how are you doing, bud? Always bringing me the roses. Thank you very much. Always puts a smile on my face, that does. So FTM, guys, let's just do a quick top down on it, shall we? Yeah. So my thoughts on this at the moment are this. I haven't looked at this in a little while, but I think the premise remains the same, right? We've swept liquidity from up here. Right? God, where that teal came from. We've swept liquidity from up here. Now our inter-range liquidity was here. We can see we got a little bit of a reaction before price came down. Ultimately, I think this is the next target for price down here. Right? Sounds really simple. Might not get down there. Where else would I be looking at if it didn't? So this was the order block. I think we've tapped that now. Yeah. So we can see that's the top of that down candle. Why am I allowing for the wicks when I normally have the bodies? Well, I allow for the wicks if there's a fair value gap after the expansion. Yeah, so order block, fair value gap here in this expensive move higher means that I make allowance for the wicks as well. Okay, so I'm not so concerned with that order block at the moment. Although if I was, then I would look at it like this. I'd be taking the order block from high to low, drawing this out, putting it in blue, and then I would want to create an equilibrium on this. Right, so basically just our midline. And that's where I'd be looking for a reaction, all right? Meaning that if price came into here, recovered this on the lower time frames and started to look bullish, I'd be favouring longs. However, I still do think that this is going to be a very, very tempting target, right? Because there's this order block sat in here as well, right? Price could have a deeper purge into this before recovering, but ultimately this is where the biggest pockets of liquidity are going to be resting under there. Yeah. So we can see when we got this drop here, price didn't quite manage to recover itself back into premium. Yeah, it just basically continued to drop from there. If we take this high down to this low, came within a bit, but we did get within this fair value gap here before price came back down. What we're looking to do on the higher time frames, is we're looking to give ourselves areas of interest that price could react. So when we had this drop here, taking out the liquidity resting here, right? And then ultimately price came in. See this low? Didn't quite take that low here. Yeah. It was actually this low that did it. Yeah. But when price dropped away like this and we saw it leave the fair value gap, this was our key point of interest. Why? Because on the lower time frames, we can look when price gets into these areas. We either continue bullish, reclaim this area, use it as support to move higher, or we have a bearish reaction in there. So we're going to put a little arrow on there, and we're going to put a little arrow on there, because they're the two times that price went into that area, right? So if you're a higher time frame higher time frame player, and you're looking at the daily and then you're moving down to say a 4 hour or 1 hour to get your execution, well, we're looking, if we want to look at the same type of patterns that I've just been describing to you, then we could see something like this, right? We can see that our high has been taken here, right? Actually, relative equal highs, this interim high and then this high here. We can then see that our interim low gets broken here. Yeah, what do we get here? A move, shifting market structure. Yeah. And what's this? Displacement, right? So this leaves our fair value gap. That's our entry. We know where the order block is down here. So we'd be looking to take our short position. Price closes here, comes back here to our entry. We'd have our stop loss just a few pips above the high, and then we would be targeting this low. All right. Nice 2.38 trade. Now, just using the same techniques, right? The key thing is here, what we're doing is we're looking at the positions on the chart of points of interest. If price had come back up here, yeah, with this move, come back. Oh, definitely don't want a text box there. So if price had come back above here with this move and hadn't broken down, what we would want to see is this area hold. Yeah. And then something like this, sweep on liquidity, price gets back above, and that's the trigger. Yeah, because like we said before, we're taking out the liquidity of those lows here with this move. We're breaking above the high that swept the low. We either look for price to retrace to a fair value gap here, or we look for our entry, right? Ultimately, these are the two setups we would look for at a key point of interest, whether we're on the 4 hour, whether we're on the 15-minute, 5-minute, 1 minute, etc. The key is finding those. Now, when we're here, we can see here we've got no break of structure, right? So when we get our trigger here, because price has come back in, this is where it interacts, and we'll move that over. Do we get the same setup again, right? Here's the highs, sweep the highs. What happens? Price comes in, sets this interim low. Why is it a low? Because it has a higher low to the right and the left of it. So we then break that. Let me zoom in so you guys can see that a bit clearer. Yeah, so this low, price comes down, comes back up, breaks this low. So when this candle breaks the low here, or this candle here, sorry, closes below it, we then want to mark up our fair value gap, which is here. So ultimately, when price comes back, we close this candle here. So this is our trigger point. That's when our limit order goes on. This order tags it. This goes a few pips above our prior swing high. And once again, we're looking to target clean liquidity below. All right. This one actually works out even nicer because we get a nice 6.2R trade on that one versus a 2.38. All right. So that's how I would be looking at that on a 4 hour. Obviously, as we drop down through the time frames, you're then just decanting that system onto the different time frames as you go down to suit your availability at the charts. Something like this is ideal for somebody that has a busy working life, family life, etc., because each of these candles is 4 hours, right? So when this candle here triggered our setup, what are we looking for? We get an alert notification because we've set our alert on this line here, which is the fair value gap. Yeah. Price comes in, we get alerted here. Price doesn't break structure for like another 2 days. Then when it closes below, yeah, you then have 4 hours to get your order in, your limit order, which you can do at any point throughout the day. Your stop loss goes above here, and then several days later you get to target. What I would have probably done here is waited for these relative equal lows here, and that would have been my target one. All right, that's what I would have been looking at to trim some profit, to bring my stops to entry and de-risk the trade. From there, I would just forget about it. I would monitor it occasionally, but I'm not going to be dipping in and out of it all the time. If it goes to target, it goes to target. If it does not, then we look to reassess and we move on to the next one. All right. Yeah, and a great point here from Craig. Let's tidy this up here. Order blocks. Order blocks are it can be really, really important, right? Especially in terms of what's capping the market. In case we want to look back on these, I like to save them. So this was from live show on the 24th and 5th. Just in case anyone has any questions, we always then can look back on these setups and review how they went if we're looking to take any in real time as well. So in terms of order blocks, right, what you're asking yourself here is where are the order blocks that are capping the market? So like we did this one here on the daily, when price then comes into this area, we're then looking for that reaction, right? We're then looking for price to purge in, get that recovery pattern and move higher. Now you can use this on the 4 hour, you can use this on the daily, you can use this on any time frame that you want. But for me, I'm always saying to myself, okay, well, what's actually kind of capping the market here? Where are the orders that price is struggling to break above or break below? Now, something that's quite evident here, and something for me that holds more weight to an order block, is you want to see it coming into a level, right? So even if it's something like this, we can see something stop the market here, right? There's something capping the market here, right? We can also see, because price came down, found support, and then ultimately expanded higher. We can also see here, right? Why? Support, lost it, retested it, sold off lower. So we could then make an allowance and we could say, okay, well, this kind of area around here is a key point of interest. Yeah. So when price interacts with this area, and then we have this big sell off down here. Now, remember what I said earlier um, in terms of what we want to see. Yeah, we want to see price interact with the key area and then have a clear and obvious move. Remember, leaving displacement, this fair value gap here. So when this happens, I'm immediately asking myself the question: okay, we've interacted with the support and resistance level. Yeah, we get rid of that for now. We know we're in that level. We've now had this big impulse move away. Where's the last down candle? Yeah, again, I'm allowing for the wicks on this because price has sold off with a fair value gap after it. So then we've got that price sells off. When we revisit it here, we've got really key points of confluence here. Yeah. Now, obviously, we would look to drop that down onto a lower time frame, right, in order to execute it. Something like this, maybe like a 15-minute. Yeah, because we found this on the 4-hour. Let me just skim back to where it is. So what we're looking for here is exactly the same pattern. All we've got here is a point of interest, yeah? This is the order block. What happens here? We come into this order block. Here we go. We break market structure here. Yeah, ultimately we have a really big displacement leg here that we don't retrace to. No problem. We don't get on board on that one, right? But no problem. We can ultimately see that the theory was correct. And you would get on board with it if you had a breaker line pattern, for example. So you've got the liquidity sweep up here, and then you come down with your breaker line. You look for price to break below that and retest it. I don't like that method massively because it really does kind of take away from the risk to reward. Once again, where are we? We're up to our key point of interest. We can refine this further by using times of day, our London session, our New York session. But just in general, right, what we're looking for here is price to break down. Yeah, return to this area. We don't quite take out this high, we come very close, but ultimately we revisit one of these fair value gaps. That's our entry. Price breaks down, right? Same here. You can see price has really struggled to get into this. Remember, like we were saying, if we drew a 50% on here, on this order block, like we did on the daily, right? Now we zoom back into here. See how price is really struggling to get above that 50%. Yeah, for me, that's bullish. If we started making strong closes here and get structure, I'd start to rethink it a little bit. But we can see we're ultimately getting these long upside wicks showing rejection. All right. So hopefully that's kind of shed a little bit of light on FTM. Craig, if there is anything else that you want on that, mate, please do let me know. I know I can kind of go off on a little bit of a tangent there. But again, that's a very, very good point on that. And I did say that we would finish on STX. For Greg Munro. So let's finish up on this. Here we go. So let's get that loaded up. You're welcome, Craig, bud. If you do have any other questions on it, mate, please don't hesitate. So let's get rid of this. It really wasn't a bad. It wasn't a bad top move, was it? A lot of that was down to B probe divergences and that as well. Actually, I remember when we were looking at that. God, that feels like a lifetime ago now. Back in March. So what are we looking at here? Very, very similar. If we're talking about liquidity, we can see highs run here. Ultimately, price has broken down. What happened here? Similar kind of story, right? If we're looking for this, we had our localized sweep. break of structure, fair value gap, showing the inefficiency or the imbalance. And we can see what happened. Price came back in, tagged that line almost to the dollar, but ultimately got back into the fair value gap as well, and now is selling off. We're now using and overlaying those same principles here. This is where, for me, I think price is reaching to. All right. Now, we would look at this order block, which again, for me personally, and I say personally because it's just the way that I see it, is if there's no immediate expansion with a fair value gap afterwards, then I make allowance and I put a lot more weight in the body of the last down candle before the move up. And this is where I'd want to see a reaction. Now, we can see again, price did come into this, respected our 50% very, very well. Yeah, literally tagged that. We've had this move slightly higher, right? But ultimately, if we're looking for the key kind of local SR, if you like, here, we're kind of looking at this, aren't we? Do that in purple. Yeah, support, 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 flipped, retest, sell off. We now can't get back above that. On this time scale, I want to see this reclaimed, right? But ultimately, at the moment, what we could see is, you see, we've set this low here. Now, this is where I'd want to be looking for a reaction here, because if we did that and then we reclaim this and we start using this for support, then I think there's every chance we could do something like this, right? So we could come into this area, purge and sweep out any liquidity below these lows, and that could fuel a move higher. In terms of if we don't see that momentum shift and price keeps going to the downside, then we'd ultimately look to be losing this order block, starting at the 50, coming down. We'd want to see this retested, and then on the lower time frames again, something like this where we get a nice sweep, close below, and we've got an ultimate liquidity target down here. Yeah, wait for this to hold, then wait for it to give us our trigger. And you know what? It doesn't look like a lot of trading range on here, guys, but from the top to the bottom of that is like almost 10%, 9.8%. Yeah, so there's plenty and plenty of that on there. So just very quickly, drop to 4 hour. Nit, my friend, how are you doing? Busy day. How are you doing? Well, sunny days in the UK. It is indeed, mate. It's an absolute joy. I hope things are going beautifully for you over in that sunny, gorgeous part of the world, full of some of the friendly, very, very friendliest people, including yourself, mate. Lovely to have you on the stream. Wasn't with you Monday. Apologies all. Just taking a little bit of time off, so there's no stream to catch up on. But if you guys have any questions about today's, do please let me know. Now we drop down to the 4 hour, we can see, can't we, actually, how key this level's been. Look at it. You get the wicks below it. Ultimately, when we get this big expansive move below, look at the upside wicks. They often tell you a lot. Yeah? You can see here. Yeah, look how we start to get these. Oh, click the wrong one, haven't I? This is what we want. Not that, this. So we can see here, look at the long upside wicks that we start to get as price starts to move away. Yeah, you can see these telltale signs in other places, which is a sign of absorption. Yeah, again, on its own, it's not the be all and end all, but you can see here things are struggling to get above. Yeah, really, really struggling. No big impulse candles taking up into this area, but into this same area and away. Now we're facing the same thing down here, these long upside wicks showing that price is getting up there and selling off and forcing these long wicks. The volume exists in the bodies. So what you'd want to see for some kind of confluence down here is something like this. When price came in here, we start to build these longer downside wicks, yeah? And ultimately leaving ourselves with these hammer type candles here, which are the smaller bodies, yeah, with very little or no upside wick, and then a long tail wick underneath them, showing that price is coming in, getting absorbed, and then moving a little bit higher. So for me, no matter the time frame at the moment, this is a really key area. I'd want to see us reclaim this order block. Ultimately, first target would be up here, then next target would be on this liquidity should we reclaim this. But ultimately, if we break down below these lows, especially showing very, very little energy or reversal, then I think this level here at 0.52055 is going to be the next key downside target. All right, guys? And you know what? Because you made such... Where was it? Mohammed. Because you are so nice, you may, any chance to see Rendir. Can someone remind me of what the ticker is for Rendir, please? Is it RNDR? I think it's this, isn't it? RDNR. Well, I'll just start on this one quickly, and if it isn't, please do let me know, Mohammed. We'll just take a quick look at this, close us off. We might even just squeeze in within our hour. Um, this is a really interesting one. This was really, really textbook for me. This was the draw on liquidity higher. This is when we broke away from this. This is a higher time frame fair value gap, down in discount, which was beautiful. Price ultimately came down into here. Look at what we got. This was really, really textbook high time frame trade. We had this move here, this expensive move high. Look what it did. Came back to fill that fair value gap there beautifully before ultimately coming up. And then here, as we can see, which we get with these breakaway gaps, is this big impulse move higher. Price didn't even come back to retest this. Ultimately got held by this kind of order block and this area here, which was also a key SR flip. Resistance, resistance, resistance here, flipped this, holding as support, moving higher. We then came back down to this area again and held it. And ultimately, our goal was to take out this higher. This was a high set back in February. We ultimately just tweaked this in April. Then we had this expansive move higher. We were then looking for a return to this fair value gap here. We actually came back through that a bit deeper into the order block, but then ultimately had this expansion as well. So looking at this now, all of this is semantics, really, isn't it? Because it's all been and gone, so that's no good to anyone. I'm keeping this on here because these areas, when revisited, can hold sway. Let me just update my comments a second. Ooh, interesting point there for that. Rendr, RNDR. Yes, RNDR. That's the one. Thank you, Nit. And Burn, I'm going to come on to that very quickly in a second to close out the session. So, really good point, mate. So what I'm watching for here now is this. We've taken out this high. Ultimately, liquidity is now resting below this low. And we've also got this fair value gap, which looks like a beautiful draw on price, doesn't it? Oh, that is too dark. Hang on. Which is ultimately the draw on price. So now we're back under this level, like we talk about if we're range trading. If this is a breakout, look at that long upside wick. Price has tried to smash out of there and has been immediately battered down below this. So the question that we've got now is this our deviation? So price has deviated above this high. We now come back down towards the low, and I would very much be looking at this area here. However, if we're going to show strength, so maybe we come down and we're held within this order block here, price kind of comes into this area here, holds up before. If we start getting above and holding this area, then we've got an initial target here to sweep the liquidity above that high. Ultimately, if we then reclaim that level, then we're looking higher, right? So that's why I always say why I've got it on my profile in terms of level to level. We don't want to hold over long time biases. Look, if price comes into here and we start getting our triggers, then we look at it on the lower time frame and we see what's available. We're not ultimately waiting for moves that might never materialize or might not materialize for quite some time. Looking at this here on the H4, something that's interesting me here is the fact that we've got this fair value gap here on the 4 hour, right? Now, price currently is kind of moving through that, not really respecting it too much. So I think what I would be looking for here is there's this very small FVG above it. Let me add that in there, and I'll do it slightly darker so it stands out. So if price starts to come back into this, and it holds or flips the underside of this, then I do think that we start making a move ultimately on all of these lows. Because look, untapped, untapped, untapped. So if we were to draw a trend line on those, this is more the significance with this trend line, right? That yes, that is clearly support as we're going up. But what I'm looking at it more is look at all the liquidity. That low didn't sweep that low didn't sweep that low, and that low did not sweep that low. Stops resting there, right? So that's the money play. Price can come down, sweep those lows, recover, and start going up. So if we're looking to trade this on the shorter time frames, So let's just take a very quick look at what we said before. Let's pop our indicators on quickly. See what trades we would have had over the last couple of days. So as of today, if we were looking to trade London or if you were up trading Asia, you can see the B Pro trailer move bearish. Yeah, so we would have been favouring bearish setups from here. We could have seen this here as our structure break to the downside, leaving this displacement. That would have given us a lovely short trade setup in here. What did we get here? So price came up. This was a lovely setup, actually, guys. Because remember what I said, we're bullish on the trailer here, but we're bearish. Why? Because we've taken out the prior day's high. See this line? That was from this high here. Yeah. Let me flick the session breaks on so it makes it a bit clearer for everyone. Yeah, this is the session break. This was that day's high here. We've broken above it. So remember, what do we look for? We're looking for our grey and blue boxes, which is the start of the New York session. Or sorry, that's what I'm looking for. Sorry, look, just getting a little reaction at this trend line, right? Be interesting to see if we lose that now. But we're looking here, right? Why do we have a short bias here? Because we've run the prior day's high, meaning we've taken out that liquidity. So what we're looking for here is our move lower with displacement, right? So we're waiting a long blooming time for it because ultimately we come into here, come higher, no sweep, right? Come back down into here. We take out the low down here, yeah, but there's not really a lot of displacement in this move. You really don't see the energy. Where when we look at this here, right, can we see how clear this is? Yeah, you want these things. You don't want to be having to scrat around and look for them. You want them to be clear and obvious. We take out this interim low here and ultimately even this swing low here. What do we get? Price returns to our fair value gap in here, which is our entry. We take our short position. This is doing it on a 15-minute as well, guys, right? So, you know, you can obviously always, we would look to refine this down to a 5-minute normally, but I know some of you guys want to trade this on the higher time frames as well. And where would I be looking to come into? Probably just a little bit lower than this, because I'd be looking for this cluster of down candles before the move higher, which would almost certainly be representative of a 4-hour or an hourly order block. And also we've got these relative equal lows here, yeah? But again, if we're monitoring the charts, we're doing our TA, we can see here this trend line that we've drawn in. You make that one size bigger. Yeah, we can see how that's currently holding price. So maybe we'd want to be looking to trim a little profit here. 2.5 hour, not a bad little trade. If we want to kind of monitor this on the way up, I'd want to see these up candles hold. Yeah, because the up candles should be compressing price lower. Last thing to say on that is, once again, remember what we're looking for here. We want to see our B Pro stock here, which represents the same as that. Yeah, here's our sweep. This is where we see the B Pro stock start to turn bearish. That gives us that little bit of extra confidence that we need. All right, guys. So look, I hope that's been helpful today. Obviously, it will be available for everybody on YouTube to watch. If you have got any questions on any of it, do come and just drop me a message. Yeah, do come and check us out at the Nest. You can come and trade with us. We've had a really immense month this month so far with the team, incredibly profitable across all the different traders. You can come and get those trading calls for free, signing up using the Bybit referral link at the bottom. And that gives you free access to the trading calls. You can sign up for a free trial for our exclusive Nest Club, which is much more of our kind of community and education focused side. And look, it's not necessarily for everyone. I think it will be for a lot of people, and I'm very, very proud of the team and the members in there. But come and give it a go. If you haven't done so already, come and see us. It doesn't cost you anything. And come and find me on Twitter, BC_Richfield. If you've got any questions, I'm always pretty active on there and looking to reach out. But just want to say, really do appreciate all of you who tune into this stream. I know they're quite long. I try and make them a mix of education and charts. But if there's anything that you guys really want to see, I'm also starting to do a series of shorter review videos now as well. Start making them public soon as well. But yeah, don't hesitate to reach out, guys. Have a fantastic week. Be aware there's a lot of news drivers taking place this week as well. So grab yourself a nice free platform, something like Financial Juice. Yeah, and that will tell you when the key announcements are out, especially things like the FOMC, rate decisions, earnings, etc. Just helps give you a little bit of a heads up on that when we could be looking to see some extra volatility, or on things like FOMC, etc. me personally, I like to stay out of the markets completely. All right. World King and One Top, you're very welcome. Merci beaucoup. And for everybody else that's joined the stream as well, you know who you are, all absolute legends. Queenie's always coming with the roses, which I love. Craig, Nitpar, better late than never, mate. Who else do we have as well? Sajid, Mohammed today as well. Great to see you guys on here as well. Greg, I hope that covered everything for you on STX. Darren, you're very welcome, mate. Thanks for joining the stream today. Pussy, Money, Weed and Crypto, brilliant name. Diggs as well was on today. Whack as well. Mr. J5, Moral, Gregory as well. And I'm sorry if I've left anybody else out. Honestly, great to see you all. Have a fantastic week. Do stay in touch. And like I say, if you can reach out in any way, don't hesitate. I'll be available at the Nest and also on Twitter. Have a great week, everyone.